Hey, welcome back. So today, we're going to break down a really fascinating day in the markets. It was a perfect example of what traders call a tale of two tapes. And all that means is that different parts of the market were telling completely opposite stories. You had stocks and crypto just getting hammered. But on the other side, precious metals were having an absolutely record-breaking day. So let's get into it and figure out what was really going on.
All right, let's just jump right in with the biggest headline of the day. U.S. stock markets did not have a great start to the final month of the year. The Dow Jones Industrial Average dropped a solid 204 points. Right away, that was a huge signal that the wave of optimism we've been seeing from investors, well, it might be hitting the rocks. And look, this wasn't just a problem for the Dow. The sell-off was broad. It hit pretty much all the major indexes. It really put a sudden stop to what had been a pretty good run. The question is, what happened? What was it that so suddenly broke that winning streak?
So here's the key thing to understand. It's the psychological break that matters so much. When the S&P 500, which is a benchmark for the entire market, suddenly snaps a 5-day winning streak like that, that's the kind of thing that makes everyone, even the most seasoned traders, sit up and really start paying attention. Okay, so this table really helps put things in perspective. Yeah, the daily change was negative, no doubt about it. And November was actually the first down month for the S&P and NASDAQ since way back in April. But, and this is a big but, just look over at that year-to-date column. Even with this little dip, we're still looking at really solid double-digit gains for the year. So not all bad news.
Which, of course, brings us to the million-dollar question. What spooked everybody? Why did the mood turn so cautious so fast? Well, the answer comes down to this specific feeling in the market that we call a risk-off mood.
Think of risk-off like this. It's the market playing defense instead of offense. Investors get nervous, so they start selling things they see as being more speculative or risky, like some tech stocks or crypto. And where do they put that money? Into things that are considered safer, like gold. It's a classic flight to safety, and that is exactly what we saw play out.
So what triggered this big defensive move? Honestly, it was a whole cocktail of worries. There are jitters about the Fed maybe delaying rate cuts, some weakness in big tech, a stronger U.S. dollar. All of that was bubbling under the surface. But the real catalyst, the thing that really poured gasoline on the fire, was the absolute meltdown that was happening in the crypto world.
And this is where that whole tale of two tapes thing really comes to life. Because while all the stocks in crypto were getting crushed, a totally different corner of the market wasn't just doing okay, it was absolutely thriving. It was a spectacular day for some.
I mean, just look at this. Gold, the classic safe haven asset, was absolutely shining. As investors ran away from risk, they piled into gold. They pushed its price up to a 6-week high and locked in a massive year-to-date gain of over 60%. Wow.
And if you think gold's day was good, check out its cousin, silver. It had an even more dramatic day. Silver didn't just rally, it rocketed up to a new record high. It's nearly doubled in value this year, and that's because it gets a boost from two sides, that safe haven demand and its heavy use in industries like solar power.
This chart just says it all, doesn't it? It perfectly illustrates that great divide we've been talking about. On one end, you've got precious metals like silver and gold just soaring into the stratosphere, and on the complete other end, you have a vital commodity like crude oil, which is actually down 10% for the year. It's just a stark, undeniable divergence.
All right, so let's circle back to the event that really cast a long shadow over the whole market. The thing that was a major driver of that risk-off mood. We're talking about the digital bloodbath, the absolute collapse happening in cryptocurrency.
Just let this number sink in for a second. In the single month of November, a staggering $1 trillion in value was just erased from the crypto market. That is one of the worst monthly drops on record, and it totally explains the panic that started to spill over into other markets.
And if you want to see that panic in a single number, look no further than the Crypto Fear and Greed Index. It plunged all the way down to a reading of 20. I mean, that is deep, deep in extreme fear territory. This wasn't just some nervousness. This was pure panic setting in among crypto investors.
So here's the damage report. Bitcoin and Ethereum, the two giants of the crypto world, were leading the way down. Ethereum even broke below that huge psychological support level of $3,000. In just a few weeks, a massive chunk of the year's incredible gains was just gone.
So, after a day with such wild, opposing forces at play, the big question is, what does this all mean? What kind of stage does this set for the final few weeks of the year? Does the fear we're seeing in stocks and crypto win out, or does the strength in safe havens tell a different story?
Right now, the market is basically caught between two competing stories. On one side, you have the bulls pointing to history saying, hey, December is usually a strong month for stocks, we're going to get a Santa rally. But on the other side, you have the bears pointing to the red month in November and all the growing risks, and they're worried we're in for a year-end slump.
And that really leaves us with the ultimate cliffhanger as we head into the home stretch. Will we see that festive cheer lift the markets for a classic Santa rally? Or are investors about to find a lump of coal in their stockings this year? We're going to have to wait and see. Thanks for joining us.